everybody, welcome to the Juniper Links Accounting channel. My name is Caroline and today we're going to talk about what expenses you can claim as a limited company. So if you're a new director, this video will be extra helpful because I have gone through in detail exactly what expenses you can put through the company and also, well, mostly examples, but you'll have the gist of everything you can do. And also what are disallowable expenses, so things that are not available for corporation tax relief and VAT that you might think that they were, but they're actually not. So those are important to know as well. Without further delay, let's hop into my computer and get started with this video. Alright, we are in my computer and we're looking at what expenses you can claim as a limited company. Now this is mostly for new company directors, people that are just starting out and are not quite sure what they can claim through the company as a legitimate business expense, something that HMRC would also be okay with. So this is what this video is predominantly for. And number one, entertainment costs. This might be a bit of a confusing one. So when you are doing staff entertaining, so for example, when you invite all of your staff over to a function and you pay for that, that is an allowable business expense because it is for your staff, for your business specifically, and everyone has been invited. When you do Christmas parties, you also have a £150 Christmas party allowance, so per head basically, and if you spend more than this, then the whole thing is not allowable, so you have to make sure it is less than £150 a head to count as a Christmas party expense. And these are all good for corporation tax essentially. Now there are entertainment costs that are not allowable, such as business entertaining. So if you're taking clients out for meals as part of like networking or whatever, your company cannot get corporation tax or VAT relief from those expenses. So make sure if you are doing those, you can only reclaim your portion of the meal and that's pretty much it. The rest is not allowable. Of course, your company can reimburse you if you paid for it from your own pocket. So your company can pay you back for those costs, but it cannot get relief with corporation tax or VAT. So keep that in mind when you're doing business entertaining. The next one is travel costs, subsistence and mileage allowance. So as you may know, HMRC provide a 45p mile allowance per mile, right? And this covers wear and tear plus the cost of fuel. After 10,000 miles, it gets reduced to 25p per mile, and this is something you can claim and just make sure you're keeping a mileage log or record. So travel between sites, for example, if you are contracting and your registered office address is your home address and the site you are contracting at is obviously a certain distance away and you're traveling there every day, you get sent off to different sites. All of that mileage going between your registered office address and other sites can be claimed as allowable travel costs. So if you're using public transportation, taxis, anything like that, you can claim those as well. Subsistence, so this is specifically when you're on site or for the purpose of business, you're going somewhere or traveling and you are unable to get your own food. The only option is to eat at a cafe, restaurant, get a ready-made meal from a supermarket or something, like a ready sandwich, ready-to-go food. That's also allowable through the company because you were unable to get your own food at that time, and it's while you are carrying out business that this happens. So HMRC do have a 24-month rule for these kinds of costs, so 24 months for the same site. What I mean by this, if your registered office address is your home address and your contracting address is somewhere else, like the specific site you go to daily, and let's say you go there back and forth for 24 months or you get an extension that will take you over 24 months, you cannot claim those travel and subsistence costs anymore for that specific route because that's now your usual place of business. Now this is HMRC's guidance, so it would be good to follow it if you can. And of course, if you make a significant change in location between sites, so you actually get relocated to a different area and the way you get there is very different and it's a significant change for you basically, then you can restart this 24-month period where you can claim travel and subsistence costs again from the company. So yeah, no groceries, but I'll get into that in a second. And number 3, tools and equipment. Of course, if you need to buy tools or equipment in order to carry out your service or For example, your client requires these tools or equipment and they're going to reimburse you the cost, which is normally how it works. You source it for them and then they reimburse you for it on an invoice. Yes, you can put these costs through the business because these are 100% directly related to you carrying out, well, your work basically. And there are some sorts of equipment that will be classed as assets instead, but generally, if it's about under £2,000, then it's easily classed as just a general equipment purchase that can be expensed normally. So what I mean is it goes down as a normal expense in the company under equipment and is immediately reclaimed for corporation tax, VAT, all that stuff. Number 4 is stationery and office supplies. So this one's pretty self-explanatory. Yeah, if you need to buy paper, pens, any kinds of paper clips, just general miscellaneous items for your business, you need to keep paperwork or whatever, that's all under here, and those are absolutely fine because they're all for your company. Staff training is another one. So this includes training of yourself as well as the director. For example, these need to be things that are directly related to the services your company is already providing. So let's say you are a crane operator, for example's sake. Anything related to this, for example, qualifications, licenses, any kind of safety training, whatever, that is directly related to crane operating, you can claim from the business. Now, if you suddenly went and learned how to, let's say you wanted to do catering and you took courses in catering, this would not be allowable for corporation tax, unfortunately, because it's not directly related to the operation of your current business. So what this means is that you want to train in a way that will get you more clients. The business will be able to provide better services, which will ultimately make it more money. Along those lines, when you start going to other categories that are not related to the services you're already providing, then it's new training and that's not allowable for corporation tax relief. Later on, if you already trained in catering and you've already established a presence of catering in your business and you want to further train in catering, then this would be allowable because your business is already doing this kind of service. So if you kind of see where that's going, that's the gist of it in staff training. Uniforms. So yes, you can claim uniforms through the company. Generally, clothing is not an allowable thing, but there are a few types that are okay. So uniforms that are branded with your company's logo are absolutely fine because it is a form of advertising. So company logo, that's all good. So you can have your branded t-shirt, some kind of branded trousers, whatever. But those things are fine because it's a form of advertising for your company, free advertising, clothing. The other type of allowable clothing is protective clothing. So if you need hard hats, steel-toed shoes, certain workwear, like durable trousers, where they have padding on the knees, that sort of stuff, that's all good. So like hard hats, protective trousers, all that sort of stuff, protective shoes, Generally things related to services that require more durable clothes because you go through them more. Things like normal office clothes, not really okay. HMRC does not like that because they're very dual purpose, and I'll get into that later on in the video. So internet and phone. Your company can provide one mobile phone per employee. Now, yes, this generally means this will be a business contract phone, so it will be addressed to your company, that sort of thing. If you are a single director, you can generally just use your personal phone contract because it is cheaper for the business. You get more minutes, usually unlimited, more data, more text, all that stuff at a cheaper cost, and you're only going to use that phone for business anyway. As the director, you can basically use your phone, the personal contract, as your business phone. It's a better deal for the company as well, so that's the justification of it. If HMRC ever wonders why you're putting your personal phone through there, it's basically it works out much better for your company and you're using that phone only for business anyway. So it's not a dual purpose thing in that case. Internet costs, obviously if you've got home office, that sort of stuff, you can put your internet costs through the company. You require internet normally to communicate with clients, to email, to access software, to contact accountants if you've got one, that sort of stuff. So it is a very necessary thing to have. And because it's kind of impossible to apportion internet, because you do not get charged with the more data you use, but for example, a phone you would. You don't get charged for extra usage, so you're pretty much okay to put your internet costs through the company. Software and web hosting. Now this is if you've got a website, obviously you'll have web hosting costs. If you wanted to create some sort of app for your company to provide to clients that will help them like get a better service from you, whatever, that's the software cost that's directly associated to your business. Obviously, if you need accounting software, if you need any kind of, let's say, Photoshop, Illustrator, whatever, to, produce pictures, to edit things with, if you buy video editing software for your business because you're making videos for your company and making advertising content, whatever, that's all allowable costs there. 100% for the business and to further promote the business to make money. Number 10, advertising and promotion. Pretty self-explanatory. You do Facebook advertising, perfect, that's for your business. You do leaflets, perfect, that's for your business. You do actual direct mail stuff, whatever. Again, the branded clothing kind of falls under this category. All of that sort of stuff is totally okay because you are promoting your business. If you make stickers to just hand out to people that has something on it with your company's name to advertise with, that's fine too. That's all allowable to put through the company. Use of home allowance. So directors get to claim a use of home allowance. You don't need any receipts for this. It's just HMRC being very generous. HMRC. And this is a flat £4 per week to go towards things like electricity, water, and of course gas that you use at home while you're using your home office. So if you don't spend too much time at home and you just sometimes use your computer for work or whatever, you can just claim this £4 a week allowance from your own company. Your company can repay you for that. And that's generally how it works. It's very simple and you don't need to do anything else. Of course, you can make your own use of home calculation to work out a fair estimate of the amount you're using for the business versus personal. And of course, you can do that. And I will potentially make a guide on this later on. But for now, that is an allowable expense. The £4 a week is very easy. Now, number 12, medical costs. So I put limited here. Yes. Okay, so it's limited in the way that you can only put medical costs that have happened directly as a result of you providing your services. So let's say you are constantly lifting things for your business. They're sometimes heavy, all that sort of stuff. And suddenly you need to go to the doctor and get chiropractic treatments because your back's all messed up. This is a direct medical cost associated with your services, so this would be completely fine. Of course, there's a limit on this. If there was pre-existing conditions for you to have this problem again, then you might need to get some more advice into this, but generally speaking, if you got hurt because of your services, then it's okay. If you need VDU glasses because you work on computers all the time, you can claim the cost of the appointment and the actual glasses themselves from the business, because it's, again, directly correlated to you providing a service. Number 13, subcontractors, employees, service costs, just general labor costs in this category here. Now, if you need to get labor done in order to carry out services, or you are outsourcing things to get done you're basically outsourcing the labor-y bits to other people, whether it's subcontractors, whether you're hiring actual employees, whether you're just getting a service completed for the business. These are all a result of trading through the company, so they're all fine. There's not too much of a mystery here what's allowable. And number 14, pension. So your company can actually contribute into pension schemes on your behalf or employees' behalf for a corporation tax relief, basically. So you can contribute £40,000 per year into a pension scheme. This is per person. So, and yeah, if you had a pension scheme that was opened a few years ago already and it was okay to pay into, but you never bothered, you can actually carry forward your allowances for the previous years. Again, I would recommend getting some financial advice in regard to this to get the best scheme set up. But if you've got a scheme set up that your company can pay into, you can actually pay yourself pension lump sums or monthly amounts or whatever, up to £40,000 a year with 19% corporation tax relief. Obviously, if the corporation tax rate changes after I make this video, then it'll be whatever the corporation tax rate is. But it's just treated as an allowable cost to the company. Number 15 is fixed assets. So these are going to be things like if you buy a laptop, things that last like at least 2 years or more. So laptop, any kind of plant and machinery. Even buildings. And these are listed as company assets and you depreciate these. The accounting treatment is a little bit different, but usually you can put these under the annual investment allowance and get all of the corporation tax relief up front rather than when the depreciation happens. So they're very similar to expenses in a way, but they're kind of listed on the balance sheet for longer. But these are allowable things if you need them for your business. So for example, you're running a web design business or whatever and you need to buy a laptop, that's fine. If you are running some kind of building business where you need to basically buy diggers and forklifts and whatever, and you need to buy those kinds of machinery for it, that's fine too. And of course, if you buy a building for your office, for your employees to be in, then that's again an asset that your company has purchased. So those are kind of some of the allowable costs through your limited company that you can put through fairly safely, because these are all HMRC approved generally. Apart from the internet and phone one, again, it should be a business phone, but as the director of the company, you can justify that because you're only using the phone for business. It is cheaper as well, which is one of your duties as a director, to basically make the company profitable. So because your phone cost is less, then it's a better deal, and it kind of makes sense to just use the personal contract in that case. But other than that, all of these are perfectly fine, and HMRC will not have a problem with you putting those through the business. We've got the disallowable company expenses list. Isn't this exciting? So these should be very straightforward, and they kind of reflect some of the things I said previously. So no groceries. These are just not allowed whatsoever. Just don't do that. Groceries. HMRC will basically say, you are a human, you are required to eat. You will be eating regardless if you have a business, if you are an employee, whatever. Groceries are not allowed because you'll be buying those with or without a company. It's not directly linked to your company. It's impossible, basically. Oh, and there are some things like overnight allowances and stuff that I didn't mention, but those are quite specific. So if you're actually spending time overnight in other places in order to carry out business, then there is a small allowance you can claim for general like bits and pieces when you're spending nights in places. Yeah. And gifts containing food or alcohol, no VAT or corporation tax relief on these. Your company can reimburse you personally for these costs, but it's not going to get any VAT or corporation tax off of them. Number 3, personal costs such as council tax. So yeah, if you're doing a manual use of home calculation, do not include things like council tax, because you will be paying this regardless if your company was operating an office in your house or not. And also, on a separate note, with the house and the office in your house, make sure it's not 100% for business use. Do not use a home office 100% for business use, because you can lose some capital allowances and such when you sell your house, because your company basically has a presence in one of the rooms, and it's just going to create a mess. So generally speaking, use your home office for leisure time as well, not just business. It'll save you some issues later down the road. Just trust me on that one. All right, number 4, no regular... Did I cover that? Yes, no personal costs. Yeah, anything like 100% personal that just does not make sense to put through the business, don't put it through. It's common sense. All right, no regular clothing or workwear such as business suits, trainers, etc. So I've seen a lot of people try to put this sort of thing through, or like dry cleaning. Not unless you've got a uniform that has your company logo on it. You can't put the dry cleaning through either. This is just regular things that you could be using for your own benefit. So like clothes that isn't branded, you walk around with it. Nobody knows that's your company's clothes or whatever. And you can easily just use it for your own leisure time, basically, and HMRC does not like that because that's dual purpose. And business suits, again, there's no direct correlation to your company. It's just like dress wear, and you can use this anytime, whenever you feel like. So there's no way your company can really pay for those things for you without creating a benefit in kind, as you can see here. And number 5, client and business entertaining. Like I said in the entertaining section, this is not allowable for corporation tax or VAT relief. So again, you can reimburse yourself from the company, but you can't do VAT or corporation tax. This does not create a benefit in kind. These are not benefit in kind issues. It's more like VAT and corporation tax. So I've specifically outlined that here. No VAT, corporation tax on those gifts. Groceries are benefit in kind because you're buying them and they're personal things. Personal costs like council tax, again, benefit in kind because it's just not, there's nothing to do with your company in this. Clothing or workwear, again, dual purpose, not directly related to your company, benefit in kind. Oops. But the business entertaining, I mean, it is because of your business that you're doing this, but HMRC doesn't like the whole food and alcohol things, so you can't get the tax relief on those. Number 6, or finally, dual purpose items like suitcases for travel. So HMRC's view on these is that they could be used for personal holidays and things. There's no real way to separate these items, which is why they created the mileage allowance, because it's impossible to separate the fuel costs of your business travel versus personal travel and the wear and tear cost as well. So they've just come up with this formula that kind of works at the 45p per mile that you can use specifically for business miles, and that's a fair way to adjust. Things like dual purpose items like suitcases, there's no way to adjust what's business and what's not. So HMRC is just like, no, that's always going to be not allowable because there's the element of personal use in it, regardless if you use it for personal use or not. So that's the general, that's HMRC's general guidance on that. And if you are ever suspicious if something's dual purpose, it's probably safer not to put it through the business. But if you've got an accountant, then it is best to ask them because they'll know and they'll be able to advise further, usually, if they're good. I mean, if they're not a very good accountant, they might not know. And then you might want to find a new accountant, but that's a story for another time. Anyway, so that's my list on allowable company expenses, basically, or what expenses you can claim as a limited company and what expenses you cannot claim as a limited company. So I hope you guys found this video useful, and if you do have any questions or comments, feel free to leave them down below. Give this video a thumbs up if you did find it useful. That's very nice of you, and we very much appreciate that. And yeah, if you want to find out more about running your limited company or whatever, or you're looking for an accountant in general, feel free to hit up our service, which is at juniperlinks.com, and we'll be more than happy to accommodate you and try to help if we can. So thanks a lot for watching, and we'll see you in the next one.